Welcome to this video. I'm just going to touch on the EURAUD here because you've got a really rampant market and you've got an opportunity to make a good or make a bad decision. So what you've got at the moment is my chart loaded on the weekly. I'm just going to flick up to the monthly for one moment. You've come off from this area down here, okay? So that was around August 2022. You actually hit that point April, so a year ago, and you've just gone up and up and up and up. And if you follow me a lot on TradingView, you'll know that I really do like to catch moves that are slightly larger, and I like to trade the market in stages. And the reason why is quite simple. We've come up for 1, 2, 3, 4, 5, 6, 7, 8, 9, 9 candles or so to the upside in one go. And you can see your stochastic oscillator just here is starting to creep up. Now, if I just swap to the weekly, you can see that my red circles I've drawn a little bit slightly more unclear, but let's just put eclipses here. So you've got your bottoming out there, you come back and yes, you fly away. Okay, there's a market maker stop there, as you sometimes get. If you took that long, that's great. But what we're really interested in is this, okay? And this is telling us do not buy, okay? The price is clearly too high to buy. Now, if you look back, you can see that the market rebounds every time that you have a dip, okay? And what you'll notice now is if you're saying to yourself, wow, I want to buy this, just look how you have not had that dip. Now, likewise, that means there's a dip impending. And ultimately, that's what's going to happen. So we need to be short biased at these points. When the markets come up and up and up, you get those extreme stochastics, you need to be short. Now, if you're wondering where this is going to end, if you want to work that out, you can use your higher time frames, like even further than the monthly is okay. And just look across, you can see various candle wicks that are bumping to the downside. Now, these will give you a reference point for price action, and therefore my bias comes nearer as we rise to 168. And also what is quite notable as well is if you use your lower time frames, as you can see within this movement up, there's no significant red candle, okay? There's nothing really pushing us down. So if you do find you get suddenly a big red candle, okay, and then you get a move back up, that is going to be great for shorts because what you're doing there is you're using early entry confirmation and you're using price action to find the area where you're bumping to the downside. So because you haven't had a seriously red candle yet, I would hold off, let the market do its thing, let it run. And then when you get a larger move and it's telling you, okay, well, perhaps sellers are moving in, you can get on early because the stochastic, again, is really high and you want market value as a good trader. Good traders will not be buying these highs because they know it's an extremely dangerous game. So looking short, don't just go nuts and say, okay, I want to sell my house and get short. That's not how trading works. Don't over leverage. Trade sensibly, trade small, and just wait for that early entry confirmation and then trade the market in moves. If it comes back down to here first, exit, okay? And if it comes back up, you can re-enter and so and so. That is how markets run the proper way. That is natural market movement. Thanks for watching, guys. See you in the next one.